Well, good morning, everyone, and Happy New Year. It is Monday, January 2nd, 2023, and we get together with our distribution partners most weekday mornings at this time. I do owe you an apology. We had a really important training on Friday, but when it was uploaded, it was not uploaded to the YouTube channel properly. We have fixed that this morning. So if you were not on Friday's training live, I strongly encourage you to go back and view it. And if you did attempt to view it, please go back and revisit, because we had erroneously uploaded Thursday's training but twice. So that was our mistake. I'm not sure how that happened. Today, we're going to kick off the new year right. And here's the commitment that we make to you, and we ask that you make as well. In 2023, we want to have 100% client satisfaction. And frankly, 100% distribution partner satisfaction. So how in the world do we go about accomplishing that? Well, let's talk about the former today. We'll talk about what is it that we can do to have 100% satisfied clients. Now, this applies to clients that enrolled in the past, of course, as well as those that enroll today and in the future. We want 100% client satisfaction. One of the things that we can do to accomplish that is to make sure that they have realistic expectations. This training, which we call the 27 mistakes, which has been refreshed, but we'll go through it briefly today, is in your white label Dropbox and has been, I believe, from the beginning. So educating clients about these tips and mistakes so they're better positioned for success is very helpful. Now, are you responsible? Must you share this with each client before they sign up? No. Do clients have to go through this after they sign up? They don't have to. But now when we onboard each client, they receive this information right away. We want them to be able to go through the 27 mistakes from the moment they've enrolled if they've not gone through it previously. And the reason for that maybe will become more clear if you're not familiar with it as we go through it briefly this morning. Above and beyond that, though, how do we go about making sure that clients are 100% satisfied? Well, first, it's making sure that we have clients under agreement, written agreement, because written agreements are important. That describes what is promised to them and what they're promising to do. So if you're a white label partner, you sign your clients under contract, and the contract that you have between you and them state the bilateral promises, what you promise to them and what they promise to us. We have contracts with our white label partners, for example, that state what they promise to do and what we promise to do. If there's, because we're talking about 100% client satisfaction here. So if ever there is an issue where the contractual terms are not being met, then one party should notify the other. It's not some ugly event, but it's like, hey, you're not doing what you promised to do. What we see sometimes is clients will have expectations that's outside of the agreement. Hey, you didn't send me a bowl of ice cream. I mean, that's an example. Well, no, we didn't send you a bowl of vanilla ice cream, but we didn't promise to do that. Well, I want a bowl of vanilla ice cream. Well, client, can you please go back and look in the agreement and let us know? So that's hyperbole, right? That's an exaggeration. No one's expecting a bowl of ice cream, but that can happen where you have clients, or sometimes we have white label partners that almost dismiss the agreements. Well, that's a recipe for dissatisfaction. And what we're talking about today is we want to focus on having 100% satisfied clients and distribution partners. So this education we're going to go through in just a moment is important, but it has to start with the agreement. Because we had a client, or I'm sorry, white label partner yesterday, and she and yesterday was Sunday, right? The January 1st, a holiday, and she was just off the rails. And so, even on the holiday, we call her. It's like, what's going on? And as we tried to diffuse what is the issue, her mindset is, well, I don't think she didn't think that she should follow the agreements. And so what happens is, if both parties don't agree to follow the agreements, then we're most likely not going to have satisfaction, because then it's like, well, what is it that we're doing then? So separate from having written agreements that separate what both parties have promised to do, specifically today, we want to talk about the 27 mistakes. So again, if you've not seen this, go to your White Label Partner Dropbox. I just want to go through it briefly at a high level. And we have this recorded on demand, so you can hear the long version of it. But what we're doing with this is helping clients, whether they've not enrolled yet, so they come in with the right mindset, or they have enrolled, and now we want to get them in the right mindset. That it's not just, hey, I signed up, where's my fucking money, right? That's ludicrous. That's financial illiteracy. We need to qualify for it. What you and I do as technical advisors is help people qualify for a capital raise. And we do that by building financial literacy, building a loan package, and helping them get credible enough on paper. So let's go through this briefly. And this is something that you may want to incorporate into your outreach. And even not, if not, this is certainly incorporated into our implementation with each client day one now. So 27 mistakes that'll get you denied for business credit and loans. Learn how the Guaranteed Funding Program can help you access a minimum of $100,000. So we start by explaining to the audience, typically the small business owner, why this matters. Well, you need to meet approval standards. It's just too good to be true. It's craziness for people to think, oh, I just signed up, where's my $100,000? We need to qualify, and the way that we help them qualify is we help them build a loan package. We get that loan package into the funding committee. The funding committee meets twice a week. We review it, and then at that point, we can either go to funding, or if not, we need to address those issues. So there's a formula you must meet for approval. Now, understand each source of capital has its own formula. Otherwise, you could be a devil's advocate and say, well, if there's some formula, why don't you just give us all the formula? Well, there's not one formula. There's a formula for each lending instrument that each lender or extender of credit has. So not all have the same requirements. We need to be credible on paper for the type of funding we're going after. And until we gather some data from the client, the baseline data, which we provide a Dropbox that those documents are uploaded into, we don't have enough information to understand where we should be going for the funding. So there's 27 mistakes, and I don't want to spend all the time to go through these because this is an available training on demand, but we'll just briefly go through most of these and drill in on those that are most important. So mistake number one is when the business name doesn't match up. Number two, not being in good standing with Secretary of State. The industry can matter. So entity selection. Certainly you can get funding as an assumed name or a DBA, but in general, it's better to have an entity. In general, we would recommend going with a C Corp over an LLC or an S Corp. You need to have an EIN, and we can help. Again, we're educating clients on a big picture. We can help them with any of these issues they have. So this is not a list of, oh, you better have all these things in place or don't enroll or it won't work for you or you won't get funded. We're not saying that, but we do want to educate them on things that they should expect. Because once in a while, you'll have clients that come to you and they have this mindset of, oh, I didn't know I had to become credible. I didn't know that I needed to get, for instance, an EIN. Well, yeah, these are things that are typically needed. Having a commercial business address is better than having a residential or post office box. So again, my goal today is not to read all the content to you. You can go through this on demand, but we're going through at a high level of why this is important in helping clients be satisfied. Because if you have clients that come in and don't realize, well, a business address can make a difference or a business phone number can make a difference in credibility, and then we start recommending, hey, you don't have a business address or you don't have a business phone number, then they might be dissatisfied. And we don't want that, right? Our goal today is committing together to have 100% client satisfaction in the year ahead. Having a website and email address is another credibility factor. A business, of course, looks more credible if they have a website and if they're using an email address that's not a Yahoo or Gmail. So am I saying that that is absolutely necessary to get funding? No. Different sources of capital have different requirements, but we are talking about some elements that make a business look more credible, gives them more options, makes them more fundable. This is a crazy one. I mean, to me, I can't even imagine thinking this isn't relevant, but you'll have some clients that don't have a business bank account. Maybe it's a brand new business. Well, great, that's fine. Then you need to go get a business bank account, but we need to have a business bank account. Some businesses require licensing and some don't. We need to have a business credit reporting agency profile set up, and we help them with that. It's actually part of the second module called Module 2. And then making sure that they have strong enough business credit scores. And again, we help them with that. That's part of Module 2. Personal credit is a great debate, right? So a lot of people will come and say, okay, I don't want to use my personal credit. I just want to use my business credit. Well, there are some sources of capital that certainly can be accomplished. But there are others that do look at the individual as well as the business. Many traditional business loans will not report on the personal credit profile, they'll report on the business. But in other words, there's a hodgepodge. There's different types of lenders that use different underwriting criteria, but having a stronger personal credit score is certainly better. And if need be, we can help them. We have a free program to do that. Collateral is an issue that was a hot button with the lady that went off the hinges yesterday. She's like, well, a lot of my clients don't have collateral. Well, that's okay. We can resolve that. And the truth is, not all sources of capital require collateral, but most do. Traditional business loans do, especially when they're above a minimum amount. Maybe up to $25,000, they'll waive that. But if we're looking for more material funding, it's not unusual that the lender will want to see that there's something to pledge as collateral that they can, frankly, come take if the borrower defaults. So again, the way our model is set up, you and I as technical advisors, we're assessing the credibility of the client and we're fixing the problems that exist so they are credible enough. So for example, if their credit's messed up, can we help them with that? Yes. If their collateral is inadequate, can we help them with that? Yes, of course. So it's not about, oh, this isn't going to work for you. Sorry. It's let's identify the problems and fix the problems. Business plans are valuable, of course, we've all heard that, but different types of lenders require different business plans. At the minimum, I was talking to a client just this morning, at the minimum, we need to know how much capital you need and what the uses of funds are. Now, a business plan could and should go much broader than that, but at a minimal level, we need to know at least how much funding we're going after and the uses of funds, because it matters, of course. Having financial projections, so looking forward. So here we're not talking about historical, we're talking about projecting forward, and that's one of the things we help them do. The uses of funds I mentioned a moment ago, crucial, right? Because how we're going to use the funds will impact the best source of capital. Industry experience can matter. So again, none of these factors matter all of the time. Different sources of capital have different underwriting criteria, but some do. Look at industry experience. So when we get a bio or a resume, or ask for a bio or resume from some of our clients, sometimes they're like, well, that seems irrelevant. I'm not looking for a job. Well, it's because, again, they've not taken the time to familiarize themselves with mistake 18, that some sources of capital do care about industry experience, and the way that we reflect that is with a bio or a resume. This is a huge one for several levels deep, and we'll talk about it for a moment. Small business owners shouldn't go it alone. And so in general, we believe that they should have an accountant that's going to provide them help with taxes, both guidance and tax return preparation. So if they don't have a CPA, can they not qualify? Of course not, but it's strongly recommended. If they do have a CPA, there's a great referral partner for you, right? Because you're helping this client of theirs get funding. They probably have other clients that could benefit as well. We believe that every small business should have access to an attorney to be able to work on the formation issues, compliance issues, accounts receivable, contracts, and etc. And there's different ways that you can affordably get access to an attorney if needed. Business coach, and we're not a CPA, so I'm not here pitching to be their accountant. We're not attorneys. We're not pitching to do that. We're not trying to get to be their business coach, but business coaching can often be valuable because it allows the client to have a resource after funding, because the goal is not just to get them their 100,000 plus, it's to help them use that and be successful and grow and survive. It does take insurance to run a properly ran business, and not everyone likes to hear that. And I'm not an insurance agent. I don't sell insurance, but again, that is relevant. Maybe they don't realize that, but it's relevant. And then, of course, where you and I come in is we want to be their capital technical advisor, helping them get the funding that they need. So the point is, a well-ran, well-established small business should have access to a number of advisors, and each of those advisors could in fact be a valuable referral partner of yours. Feasibility data to verify the projections that we're saying. Oops, skipped one. Target market, who they're going to go after. Mistake number 2, let's talk about this more because it's really relevant. I sometimes want to bang my head against the desk when I have an early stage business, or what maybe you want to call a startup, that says, well, financials are not relevant. I just started this business yesterday or last week or last month. And it's like, that is not accurate, right? Because the lender doesn't know what the business has done to date. And so if we can't present it as part of the loan package, then the lender doesn't know. And a lot of times they're not going to guess or make assumptions. So there are 2 very important financial statements from a historical perspective. This is different than the projections we were talking about before. Earlier, we were talking about looking forward. Here, we're talking about now and up to now. And so the balance sheet, which shows assets and liabilities of the business. When you have a financially illiterate client, they're liable to come back and say, well, damn it, Tom, I just told you I just started this business. There is no balance sheet. Well, client, you're looking at this wrong. We need to make the business look as credible on paper as possible. And so from the moment you form the business and opened a bank account, you have at least some assets. You put some money in the business bank account. So balance sheets and income statements, which are sometimes called profit and loss, are relevant. And again, we can help them do that. One of the clients we have that from the disgruntled white label partner, they're running their business so inadequately that they're not tracking money coming through. And so here we have a lender, we got them pre-approved, we're trying to put together the documents, and the client is just running it like a babysitting club, even though it's a more significant business and in terms of industry and volume. So we're helping them get these financial documents together. That's part of the value proposition. We can't fall into the mistake of, oh, I'm a new start business, so this doesn't apply to me. Oh, it does. It does, because the lender wants to see it. Frankly, it doesn't matter what the client thinks. Doesn't matter what you think. Doesn't matter what I think. It matters what the lender wants and thinks. And that's what we're trying to do, is build a package that meets with what the lenders want and think. We talked about insurance agents a few minutes ago, and it's interesting. You have some small business owners that say, well, I don't have any insurance. I'm a startup, or I'm stone cold broke. Well, that could be a problem depending upon the type of capital. So insurance is relevant. Cash contribution. To come in stone cold broke and expect to go borrow a huge amount of money is difficult. And so in some cases, we can layer in capital, but for traditional, and not all sources of capital require this, but for a traditional business loan, they're going to look for the owner to contribute some of the money to the capital raise. So if we need to, we can do some layering, but it's an element of client future dissatisfaction for them to think that they can come in, have no money invested in their business, and go borrow $1 million. Could it happen? It may, but it's not the norm. Huge one, mistake 25, not running your business like a business. And there's many, many examples, many things we could talk about here. But for example, as I was mentioning with the client earlier, we need to use some sort of method, either software or outsource it, to track our business, our revenue and expenses. QuickBooks, which we don't have any financial interest in, is one of the most common, but we need to track our revenue. Think about it from the other perspective, from the lender's perspective. If you had an applicant coming in to you for a small business loan that wants 6 or 7 figures, that doesn't seem that they have any method in place to track money and profitability, would you feel comfortable loaning them that much money? Probably not. So we need to look good on paper. And that's what we're really good at, is helping clients look good on paper if they'll comply. So our topic today, remember, is on client satisfaction. Why are we going through this briefly? Well, a reminder, number one, you'll find this in your white label Dropbox if you're a white label partner. But the second is, this is there for a reason, and you should probably be familiar with it. If you want to introduce this to your clients before they sign up, you can. If not, then we will certainly introduce it to them after they've signed up, so we're all on the same page, because that's the biggest reason for client dissatisfaction is illiteracy or ignorance, unrealistic expectations. And so that's what we're trying to do, is not make excuses. I haven't been funded yet. I've been with you 13 days. I've not been funded yet beyond their first tranche of financing. Well, you're not credible enough yet, right? We're trying to resolve that. Another issue is not paying yourself a salary. We strongly advise that all small business owners not be self-employed. Set up a payroll service. You can do it with QuickBooks Payroll or whatever you want, real easy, and pay yourself a paycheck every Friday with the appropriate tax deductions. That's going to lower your tax liability at the end of the year in most cases, because of the excess distributions not being subject to employment taxes, and it's going to make us look much stronger on paper. So these are examples of what we would like clients to do to become more credible. Do they have to do it? Of course not. So we need to make sure that we understand, and you and I understand this, I'm not lecturing you, but to run a business properly requires some effort and involvement. It's too good to be true to think, okay, I'm just going to go form a business, not set it up properly, not run it properly, and oh goodness, I can go get lots and lots of money from banks. I had a lady that texted me, and I'm embarrassed to even say this. She texted me yesterday, New Year's Day. Hey, do I have to pay back this loan? Think about that. Think about that. Well, of course you pay back loans. It wouldn't be a loan if it didn't need to be paid back. So I'm not here to be a pessimist. I'm here to be an optimist. There's so much positive impact that you and I can have by going out and educating small business owners using this material. You could go to libraries, churches, chambers, and teach on the 27 mistakes. Help people understand what it does take to be successful in raising capital, and you can enroll a lot of clients. If you don't want to educate clients, you can skip that. We'll pick it up from the moment they enroll. But if our goal is to have a 100% client satisfaction, what we know is an educated client's more likely to be satisfied. Picking the wrong business for your circumstances. And I wish this slide weren't even in the PowerPoint deck, because it doesn't feel good to tell someone that in some cases what they're looking to do is not the right step right now based upon their circumstances. Now, we won't turn them away, but I've got Joseph as an example. He's a client, and I've used him as an example recently, but he came to us. He's looking for $20 million to buy a commercial property. And if we went back to these mistakes, he falls in a crucial area. A number of these areas is not credible yet. And so here we are working with Joseph, to get him from where he needs to be. From where he is to where he needs to be. And that's common. You're going to bring clients often to the table that are not yet ready for the funding that they want and need. And that's okay. That's okay. It's our pleasure to help them become more credible on paper. The point on this slide is we may have to take some interim steps. For us to wait until Joseph qualifies for $20 million is probably not going to be palatable to anyone. So what we have agreed with Joseph, and he is satisfied, is we're going to get him his first 100,000 of working capital now, and then work towards the 20 million, because the honest truth is he's not ready for the 20 million. So this is a tough one because no one wants to hear this. And then mistake number 27, the final of 27, is wrong source of capital. So different sources of capital have different underwriting criteria. So that's why our process is as it is. Client signs up, we plug them into the financial literacy. They can engage or not, it's up to them. They have access to it on demand now, and they don't have to wait for it to drip to them. And then we provide them the list of documents that we're looking for. It's not all or nothing. It's just whatever they do have. They upload that into the Dropbox, and then they go to the funding committee. Funding committee normally meets twice a week, Wednesday evening, Saturday mornings, and we review that and then put together a plan. So you'll sometimes have clients come to you and say, well, how long is it going to take to get funding? Well, the first tranche should be in around a week or so. To raise the full amount of capital that you want, we need to take some steps to figure that out. And that starts with you enrolling, and that starts with you uploading the documents that we've requested that you do have. It's not all or nothing into Dropbox. It goes to funding committee, and then we can have a plan. It is unrealistic. It is, sometimes people will use the word scam. Oh, it's a scam. Well, no, not if you follow what we do. But if you make false inferences, oh, I can sign anyone up and they'll get $1 million tomorrow. That's not realistic, but that's not what we promised to do. So we need to get clients enrolled. We need to help them participate. We need to get the initial data set so we can create a plan. That will result in client satisfaction. That will result in many, many referrals from each client to you. If we don't manage this properly, you can end up with dissatisfied clients. So we won't dismiss them, but we need to get them back on rail. So again, this 27 mistake PowerPoint you should find in your white label partner Dropbox. You can edit it with your branding information. And I'd strongly encourage you could do webinars, you could do live workshops, you could do none of that, of course. But if you go out and educate people properly of what it takes to become credible for a capital raise, you're going to attract the right type of clients with the right type of mindset that will be successful. So who has questions or comments on today's discussion, which is really twofold? We want our collective goal to be 100% client satisfaction. I also want 100% of you, our referral partners, to be satisfied. That starts with the agreement, making sure that both parties know what they've agreed to do and stick with it. If we start asking each other of things that are not in the agreement, then that would be unfounded dissatisfaction, right? Alfred's on here, and I could give Alfred a call after the Zoom and say, Alfred, I want a gold bar. Could you go ahead and overnight me a bar of gold? And Alfred would be like, WTF? What are you talking about? Alfred would say, Tom, I didn't promise you a bar of gold. Well, I know, but I'd like a bar of gold. Of course, I wouldn't ask him for that, and he wouldn't send it to me anyway. But that's what sometimes happens when clients don't have, or even distribution partners, when they don't realize, okay, we need to follow the agreement. So if the bar of gold wasn't there in the agreement, I probably shouldn't ask for it. Now, I could try to negotiate and get an addendum with Alfred that he sends me a bar of gold every Monday, but that's not realistic, of course. So how do we get 100% satisfaction with clients as we move forward in the year? First, make sure everyone's following their agreements. Secondly, as we've gone through this 27 mistakes, education could really help. If you want to educate people before they sign up, do it. If not, we're going to hit them with this the day that they enroll. We send them this information so we can get off on the right track. The biggest reason for client dissatisfaction is, number one, they don't follow the agreement. Number two, they're not participating. And this is an important part of participation. From a white label partner perspective, number one reason we have problems with white label partners is they don't want to read and follow the agreement. They want something different. Well, that's not what we agreed to. Who has questions, comments, concerns on our goal for 100% client satisfaction and or this funding guide, which each of you should find in your white label partner Dropbox? If you don't see it, let me know and we can get it to you, but it should have been uploaded when your white label partner Dropbox was first created. All right, well, we covered a lot. I was thinking about spreading this out over several days, but since this is available on demand in more detail, my goal was really just to go through it, hit some highlights. But let's work together. Let's be committed to 100% client and distribution partner satisfaction. That starts with both parties following agreements. If there's ever an instance that we're not doing what we promised to do in writing, let us know and we'll do everything we can to resolve it. If you as a white label partner or as a client are not doing what you promised to do, we're going to let you know, called a notice of breach. Not being mean, not being hateful, but hey, you're not doing what you promised to do. If we have that type of communication, we can resolve issues when it comes up. And hopefully they won't frequently. All right, well, thanks everyone. Have a great day. We'll see you back tomorrow morning. Bye-bye.